Good evening, everyone. Welcome back again. We're talking about a week two recap of what happened in the competition this week. And basically, it's all about staying the course. Staying the course when you have a plan of action, things are developing in real time, you have to make decisions, and you are tempted to go one way versus the other. Stick with your plan, don't stick with your plan. That's what we're going to be talking about this week, all right? So let's jump right in. So, as you can see here, my rank as of Saturday morning is 162. Gosh, nabbit. 162 out of 989 competitors. Now, what was important about Friday? As of Friday morning, my rank was 72. So, what happened in between Friday and Saturday morning that my rank would have dropped so significantly? Well, let's just take and the answer is not that I lost money. In fact, I gained probably about 1 to 2% in my account. I think I started with something like 4,000 um, coming into Thursday evening, and I ended the day on $1,006,861.51, which represents a 10.96% annual return. Again, not too shabby, but currently I am being completely blown out of the water by some of the other top competitors. And I'll just use this one person as an example. Kiroy32, whose rank on Friday morning was number 962. 962. On Friday, because the rankings are adjusted um, every morning at, let's say, 7 a.m. On Friday, this one individual put up approximately 113,000. Bam! 113,000 on the day. An incredible single day return, which I am sure is as a result of 100% um, ROI move, return on an investment move on whatever it is in particular that this person must have bought. And if you tuned into last week's video, I mentioned the fact that a lot of these gains are very outsized. You have to be very accurate and pick assets that are going to move not only in a short period of time, but have very large price changes. Very large price changes are great if they're going up and going in your favor, but they can be very dangerous in the opposite direction if you are not very good at risk management. And so I mentioned the fact that a lot of the people in the competition, in fact, practically all of them, who have put up some serious numbers, 20,000 and up, they are trading penny stocks. If we were to jump across to portfolio, let's just take a quick look at the most popular buys, because shorts are not allowed in the game. You can see all of these here are penny stocks. Naked, SCON, CEI. I have absolutely no idea what any of these do except Bed Bath and Beyond, BBBY, and Neo, which is an electric car company. I have absolutely no idea what these other companies do. And so, in some sense, they are executing perfectly, which is that they are playing to their strengths, which is speculative penny stocks. I was tempted early on this week. I began actually looking at a few of them, hoping that perhaps I would be able to leverage my technical analysis and price action skills to catch a move in one of these names. And to be fair, all week the trade never presented itself. And it just so happened that we're dealing with a very headline driven market environment. That is to say, the US and China had a trade talk on Friday that the market was keenly anticipating. And so if we take a quick look at the S&P 500 on a 4-hour chart, you can see that We closed at almost the very top of this existing trading range on Friday. We began that trading range all the way down here on Monday with a low at around 28.90, and in anticipation of that trade delegation talk that was to happen on Friday, we basically had a huge bounce in the market since then. But it was not an easy bounce to play because the action was very volatile. Intraday, the action was very volatile. And so, in effect, no one in the competition who was trading penny stocks put up any numbers. In fact, the reason I was steadily moving up the board, I was started at 83, I jumped up to 78, then I jumped up to 72, then went back to 85, then popped back up to 78, and then ended on 162, was because on that one day only, and I probably should have taken a screenshot of this, on that one day only, on Friday, was the day that penny stocks as a sector performed well, because we had a massive bounce from the open, basically what is known as a trend day, until we came into the last half an hour. Effectively, all we did was what we call one time frame. Every single time frame, we just kept going higher. So this was almost a trend day. A trend day, we finished at the highs or the lows of the session at the closing bell. So a very bullish day with a sort of a bearish ending. Because if we drop back to the 30-minute chart, you can see as we approach the top of the range here at 29.95, we began to get some iffy price action. There was some news coming out one way or the other of the US sending troops to Saudi Arabia. The market uh, sold off instantaneously, then bounced right back, then sold off again, then came back, and then sold off into the close. Actually, sorry, this is Sunday, so it sold off. This big candle here was the last 30-minute candle on the spools, and we had just a straight sell from the very top of the range nearing the middle of the range for the day. And so where does that leave me in the competition? Where does this leave us for the market going into next week? And so for next week, because of this fairly bearish close, and this is currently Sunday evening, and you can see the futures as they open. We had a bounce into the top of, sorry, the bottom of this range here that was established intraday on Friday. We hit that, found supply, sold off. And so what we need to look for tonight is definitely a hold of 29.65. If 29.65 does not hold, we can see a test all the way back down into 29.40. And on really bad news, right back to 29.15 or thereabouts. So let's take the time to talk a little bit about strategy. And so what is going into my thinking at this point? As I mentioned in one of my prior videos before the competition began, I stated that in my estimation, I believe that the competition would come down to, 4 or 5 good days. Essentially, because of the short amount of time involved, there could not be a portfolio approach to selecting a basket of stocks and just letting them do what they want to do in terms of following a trend, because of the short period of time and the intraday volatility within the market, given that we're in a seasonally volatile time and we are in a volatile period geopolitically, particularly concerning the China-US trade talks, and of course all that is going on in the Middle East with Turkey, Syria, and the likes. And so effectively what I'm doing is trying to play to sort of my strength pertaining to market knowledge. And so I actually have two positions on here in the VIX. I am actually long the VIX via the VIX short terms ETF, and I'm also long an ultra short ETF of the S&P 500. So what effectively am I looking for? I am looking for, as we just mentioned, possibly a little bit of a retest into 2980, and then for some news-driven event to come into the market that is going to cause it to sell off hard down into 2940 and to retest 2915 and beyond. And so if you're not familiar with the VIX is simply a measure of the implied volatility in the S&P 500. Of course, now you may not be familiar with implied volatility if you're not familiar with options and derivatives, but it is effectively how much prices move around, are expected to move around intraday. And so we've been forming a nice little descending channel here on the VIX. Now the VIX is not something that I usually chart because it's almost like a heartbeat of the market. It's known for its spikiness, in so to speak. And so what I'm actually playing for is I'm playing for a break. We're testing the most recent lows of this channel. I am looking for a break up into 18 and above, possibly reaching as high as the most recent highs around 23 or 25. I am currently long with an average price of at around 1921 on the VIX shares ETF. The current closing price was 1897. If we hold where we are overnight in the futures, I expect this to open down probably 10 or 15 cents and hopefully begin to move in my direction much sooner rather than later, else I'll have to cut this position and reconsider at a lower level that gives me a better opportunity for price appreciation on a spike, or look for another opportunity altogether. The triple share ultra short ETF, it's effectively this is what we call the opposite of diversification. In fact, I have two positions that are playing for the same catalyst or outcome, which is a fall in the S&P 500 and a spike in the VIX. And so I'm currently up about 700 on the ultra short. We'll see where that carries me next week. I'm looking, this is one of those plays, because of the spikiness of the VIX, this is one of those plays that I'm looking for a 20, 30, 40% ROI on the 100, approximately 77,000 I have invested, which means I'm probably going to add to this position if it continues to go down, probably into the low of Friday's session. I can't add to this anymore. I'm already at 98,000. The max any one position can be is 100,000. And so I will look to sell this into strength and probably hold on to the VIX, anticipating that we're going to spike further as fears ramp up or some new narrative comes into the market next week. Thank you guys for joining me. It was a pleasure. See you next week.